So yesterday I saw a really poor video put out from another UK content creator, well I say UK content creator, maybe Russian content creator, talking about why the stock market is crashing. And it made me laugh because I thought this is coming from a guy that when we last had the stock market crash in 2022, deleted all his stock market content, all his stock market picks because they all went terribly, didn't do any more stock picking, just went on to finance news, made a video about trading 212 saying it was going bankrupt, and then went and did record amounts of profitability. Talked about selling Palantir at $10 or whatever it was, and then it went on to double from that share price. And then was talking about Tesla at $400 and now it's sitting at $200. And this guy is coming on here talking about a stock market crash. And I thought, hold on. Last time we had a stock market crash, you ran away. And I thought we need someone on here to actually talk about what is going on. Someone who actually came through the stock market crash, who stuck around making stock market content through the stock market crash and always posts about what I'm doing, what moves I'm doing, what I'm buying, and not hiding away from the crash. Now for me, it still surprises me that someone with this lack of knowledge in the stock market still gets 100k views on every YouTube video. You'd think people would be a little bit wiser to this, but I think unfortunately people are fooled with this information that's provided because the information provided is maybe in an entertaining way. Maybe they can say things very quickly and trick the audience. Maybe sometimes they can use big words and also put a little bit of a joke in there. A bit like politicians. Sometimes they sound like they know what they're talking about, but quite often they don't actually know what they're on about. And thinking about it, Russell Brand has disappeared for a while, so maybe he's got a new job and he's talking about the stock market. But unfortunately, I think people are tricked into this content and they think they're listening to someone that knows what they're talking about when it comes to stocks. But in this case, it will quite clearly in this case, they don't have a clue what they are talking about. Now, right now, I'm going to apologise for the clickbaity title with the stock market crashing there. Unfortunately, to compete with these other big YouTubers now, you've got to go for the clickbait. I try not doing the clickbait, but unfortunately the views are poor and it leads to, unfortunately, people falling in to listen to these poor YouTubers. A little example of that is the last time I did do the kind of 2 more clickbaited videos. They did go by far my best videos in the last 10 videos that I did. So I do apologise that, but I am trying to save people from falling victim to these stock market channels that have no idea what they're talking about. Now what made me laugh is the other day this YouTuber was talking about the stock market will boom. I've seen so many videos saying, oh, the stock market's about to boom. And then all of a sudden we've gone from the stock market will boom to the stock market is crashing and quite a negative view on the stock market, which, by the way, that video was a complete copy of the one that I put out a couple of days ago. And I actually saw someone comment on the video yesterday that they posted saying like, hold on, you were talking about the stock market, it's about a boom. And now you're talking about the stock market, it's about a crash only within like 2 weeks. What's going on here? And that was my actual thoughts when I was watching that video, to be fair. So good to see some people are calling out the BS when they do see it. So stock market crashing, what is going on with the stock market? Well, overall the stock market isn't really crashing. I mean, what, the S&P is down 4%? It's not a crash. It's certainly a bit of a pullback, but the stock market is still up a lot year to date. And to define a correction, it's 10%. To define a crash, it's 20%. So the stock market has a long way to go until it actually does have a crash. But what you are seeing is some of the components of the S&P 500, the biggest ones, the ones that have the heavy weighting. Even though there's 500 stocks in the S&P 500, the top 10 control most of the movement in the S&P 500, and them stocks are crashing. So you look at the likes of Microsoft, for example, and now from the time its earnings come out and it has its drop off earnings, the stock's going to be in a correction. You look at Nvidia is technically having a crash because the stock is down over 23% since its highs. Granted, it's actually going to have a jump in pre-market saying that, so it will be no longer in a crash, but some of these big market cap stocks are having a big pullback. And yesterday was a really red day in the market, making it feel like it was a bit of a bad day in the stock market. However, it was just these big Magnificent 7 having a pullback. And what we have at the moment is people say the stock market is crashing, the stock market is crashing. But what really they're referencing to is this Magnificent 7 of stocks. They're having the pullback, not the whole stock market. This big term at the moment is that the stock market, when what people actually mean is they're actually talking about the Magnificent 7. The stock market's up. Well, maybe not. It's just the Magnificent 7 that's up. The stock market's down. Well, not really. It's the Magnificent 7 that's down. And I've noticed this is kind of like lazy about what's going on in the stock market, because when people say the stock market, they're really talking about 7 stocks in particular. Now, what made me laugh is the video was talking about the AI boom, which I called out about a week ago, 2 weeks ago, and it was a pretty much copy and paste of what I said. AI boom. So at the moment we're seeing billions and billions spent on AI. And we're looking at the moment and what revenue is being created, what profitability is being created by the AI situation. And there's not a lot. I went through Google's earnings, I've not gone through Microsoft's just yet. There's a talk about AI contributing, but there's no actual figures about what AI is contributing to profit and revenue from these numbers, which in my opinion would be the case that the suggestion is not a lot at all. And when you look at the research that came out the other day, that there's a lack of benefit yet being received from AI on the financials. And I think this is very true. There's a lack of AI benefit in companies' financials at the moment. For the billions they've spent, they are not getting the return on the financials at the moment, which is obviously quite concerning. I think when you look at most AI programs, they're not that really game changing. You know, you go into AI to design a holiday plan or holiday routine, and it's basically the top 5 things off TripAdvisor. You know, I could have done that myself. It's not really showing the benefits in the financials, and that's the same when you look at like Microsoft and Google. Most of the earnings that came from Microsoft and Google were normal. There wasn't a standing out boom because of the AI situation. And most of these companies, you know, you take Google for example, or Meta, another one that's spending like millions on billions, not millions, billions on AI. And the only way that the financials are improving at the moment is because they're showing like more adverts. They're doing more adverts to show that the profit and revenue is increasing. The reason why the profit is improving isn't because of this AI synergies that are coming, it's because they're cutting staff. And people looking at the billions they're spending at the moment are going, that doesn't really justify the billions that you're spending at the moment. And a few people are getting a little bit twitchy looking at, you're spending these billions, but we're not seeing it in your financials. And then what also happened with a lot of these AI booming stocks like Nvidia, which is a little bit different because they're the actual provider of chips. But if these companies are spending billions and they're not getting the rewards, how long do shareholders put the pressure on of like, hold on, you're spending billions in this AI boom, but you're not getting the rewards. And then that has a knock-on effect of like, oh, we're going to slow down our AI spend. Nvidia then gets hurt by it from that point of view. But the ones that are actually spending the billions at the moment on AI, if they're not seeing the financials, how long to these shareholders start putting pressure on them? And then what also happened is what you had with the stock market is it got so carried away with this AI situation is that the market was already forecasting or pricing in the AI boom into the stocks. You know, you had the likes of Google go to its, one of its historic high evaluations. Microsoft is 36 times earnings. Microsoft should not trade at 36 times earnings. It's a great company and it's a premium company and it should trade at premium valuation, but not 36 times earnings. You had the likes of Nvidia, a 2.5 trillion market cap. A lot of these stocks were pricing in an AI boom and yet aren't getting the financials. And you're seeing the S&P go to 29 times earnings because of the big holdings, the magnificent 7 that's in them holdings that make up the big weighting have gone to very big, valuations. And then the S&P is at very high valuations that what it normally trades at. And all of a sudden we've gone, hold on, we've actually not had the financial boom from it. We've just had metric expansion, and there's only so long you can do a metric expansion. When you have the metric expansion, at some point, if you don't have the financials to catch up, you're going to have the snapback on share prices. And I called this out, and I think we are starting to see that happen at the moment, is that people have realised it's not financial booming, it's just metric expansion going on at the moment, and we're going to have that eventually catch up to us, where these share prices either stagnate and the financials do catch up, which however long that does take, or we have a pullback. And that's what happened in 2021. That's why we had a stock market crash in 2021, 2022, is because all these metrics went to extended valuations and everybody turned around and went, but this is way too high for what we normally trade at and we're not getting the financial catch up. And then we had the reset. And that's going to happen with the Magnificent 7 at some point, in my opinion. But then you look outside the Magnificent 7 and you look at the stock market here, and there's a weak economy. There's a weak economy creeping in my opinion. I think we should have had the interest rate cuts, and maybe the Magnificent 7 has covered the economy cracks up a little bit at the moment. You look at Starbucks, once again, quite weak earnings. McDonald's, weak earnings from the consumer here. There is the cracks in the economy, and it is something to be worried about. However, you look at some stocks and they've kind of really priced it in. This is a really big stock pickers market at the moment, because you look at the indexes at all the all-time highs, but in the S&P 500, you got a record high of stocks at 52-week close. So you've clearly got stocks priced in a weaker economy at the moment at good valuations that look attractive. So for a stock pickers market, it's looking pretty attractive. One thing that I've always said is the S&P 600. The S&P 600 valuations, the S&P 500 is a big disconnect. I've been saying that, in my opinion, the S&P 600 or the Russell 2000 are good opportunities to be looking at. And I personally picked up the S&P 600, as you guys know, a while ago. You look at the S&P 600, it's up at, what, 11% this month? And everybody's talking about, oh, it's getting a bit frothy. But then all the small caps are absolutely rallying. So when you talk about the stock market, oh, the stock market's a bit weak. Well, it's not. The Magnificent Seven are a bit weak at the moment. The stock market, when you look outside of there, is you've got some opportunities. You even have the small caps actually doing really well at the moment. And it's like the UK market. You know, a lot of people don't like the UK market, but in my opinion, there's opportunity there in the UK market if you can find the right opportunities. You know, you start looking, and two investors that I actually respect, which is Paul Hill and Paul Scott from Stockopedia. Two really good investors, especially Paul Scott. Two really good investors that actually give you knowledge on why they're buying this stock and back it up with facts. And I was listening to them the other day, and they were talking about PEG ratios. And you look at the PEG ratio for the NASDAQ 100 and the S&P 500. The AIM on the UK market is nearly half the PEG ratio of the NASDAQ. The FTSE 250, once again, is a big discount to the NASDAQ 250. And it's clear as well when you look at the takeovers, the amount of takeovers that are happening in the UK market at the moment shows you how undervalued the market is in the UK market, and there's opportunities there. And this is where it comes a really big stock pickers market at the moment, because I'm not going to say the stock market's overvalued. I think certain stocks are overvalued, and I don't know what overall effects that will have for the stock market and the S&P 500 when those stocks still do pull back, because I think they're overvalued and I think they need a pullback for sure. But I'm not stopping buying, because I look at the stock market and I think there's opportunities out there. I think there's big opportunities out there, because when you look at some of the stocks outside the Magnificent Seven, a lot of them are at good valuations. A lot of them are priced in a very weak consumer environment. And if you're able to find those opportunities, and you look at the likes of Supreme, for example, that's having a very good year. You look at the likes of Card Factory, that's really started to go on one this year. You look at Greggs after their report and how much that stock's rallying up this month. If you can find the opportunities in this kind of small cap space, in particular, in my opinion, you'll do very well with the stock market. And overall, that is where we're at, in my opinion, is that the stock market isn't crashing. We have a certain batch of stocks, the Magnificent Seven stocks, that are overvalued and are coming down because they're overvalued. They've had metric expansion and they don't have the financials to catch up with them. At some point, I'm not saying the AI boom is false. I think this is one big thing that was said on the YouTube video that from the guy that has a very bad knowledge in the stock market. You know, he said that, you know, the AI boom is all, you know, fake. I don't think it's fake. I think the AI boom could be something, but I just think people got way too carried away with it. And I think it might show in the financials in 3, 4, 5, 6, 10 years time. But right now, there's too much priced into the stock. And that's the big issue that you've got with the Magnificent Seven. So the Magnificent Seven is overvalued, and certainly that is in a bad place. But in opportunities in the market, I certainly think there's opportunities out there. I think there's very big opportunities out there if you look in the right space. And this is where it comes time to be a stock picker. If you can find those good valuations in this market, I think you'll do very well. And that's what I'm trying to do. I'm trying to find those stocks that have, you know, very good valuations. And it's not even the ones that I look at. You know, there's certain other stocks as well in this space that even I missed that are doing very well. Listening to Paul, like I said, listening to Paul Hill and Paul Scott the other day, and some of the opportunities that they've taken up in this market. So that's where the stock market is at the moment, and that's more of a clear and detailed view on what is going on and my thoughts on where you should be looking and what is actually crashing in this market. And hopefully that is better information for you guys, because sometimes some of these big YouTubers that I don't know how they get to the level of audience they're able to influence with such a low level of knowledge, are able to put that content out and it to be so viral on a YouTube scene, and then they can get caught up in the wrong direction, you know, saying things like Trading 22's going bankrupt and selling Palantir at $10, and then it goes on to you know, skyrocket. You just got to be careful, guys, and hopefully that's a bit more of a clearer information about what is going on in the market, and hopefully that's useful for you. Hope you enjoyed the video. Catch you in a bit.